Hey everyone, we've got some great news for Domino's and Uber stock investors. So I'll get right into it here. So Domino's, the world's largest pizza company, has signed a deal with Uber to list its menu on the Uber Eats and Postmates delivery app. The company announced. Although the orders will be delivered still by Domino's drivers, the company hopes that listing its menus on the apps will expose it to more potential customers. Now, I say finally because it's been a long time. Domino's has resisted placing its menus, its items on third party delivery apps. Domino's has long thought of those companies as their competitors, their competition, so they resisted helping the competition by placing their pizzas on the platform. And if you think about it, it really is a big competitive threat to Domino's. If we rewind, let's say 10 years ago, and if an individual wanted to order food for delivery to their house, they had far fewer options. It was either Domino's or one of, other pizza companies, or maybe you had some local takeout restaurant around you that offered delivery, but that was rare. That was rare. So you couldn't just order whatever you wanted delivered to your house as you can now. Like whatever you're craving, whatever food you're craving, you could pretty much order it for delivery to your home. And that's a big change from a decade ago where Domino's didn't have to compete with so many options, right? So Domino's didn't want to help these third-party companies by itself placing its menu items on the platform, but it looks like Domino's has changed course here and is moving in that direction. And the reason that this has happened is because Domino's, when the economic reopening gained momentum, Domino's has had a very hard time securing labor. They have a hard time securing enough people to run their stores, their restaurants. They have a hard time finding delivery people. They have a hard time finding people to work inside. And so I've long said that this is a major decision that Domino's CEO will face and will have to make a tough choice here. Now, even I wasn't clear as to which direction would be right, and still it remains to be seen if resisting partnering with the third party food providers or partnering is going to be the better choice. But for the near term, considering the labor shortages worldwide Domino's is facing, this seems to be an inevitable choice. Now, I will highlight that for now, Domino's will still be delivering the pizzas, and the only thing that will change is you can order Domino's from Uber Eats, but then Domino's will be the one to deliver it to you. So it's just going to increase potential sales for Domino's. Although I do believe that further down the road, maybe 3 months, maybe 6 months, maybe 12 months, I believe the partnership will expand if it's going well. I believe the partnership will expand to where Domino's will also be using the third party delivery drivers, because that's the area Domino's faces the most constraint is from drivers. Domino's has significant driver shortages. So I was surprised to see that this deal did not already include that. Domino's retained the responsibility for delivering the products. And so I would not be surprised if in the future this deal expands to include delivery, which I think will be really good news for both parties also. Now, the market is reacting positively more in favor of Domino's for this deal instead of Uber, which is surprising. Domino's stock going up by 11% today after this news was announced, while Uber stock only going up by 0.5%. I would have thought Uber would have gotten a bigger lift because of this deal, because the way well, the details are not out yet, but the way it's structured with Uber not paying, with Domino's having responsibility for the delivery, it seems like this just gives Uber an opportunity to generate more sales and earn more revenue without the costs associated with that revenue. Uber's biggest costs, Uber Eats' biggest costs, are paying the delivery drivers. So if Uber is going to have the menu items on the platform but not be making the deliveries. It just seems like a really good situation for Uber. They're going to generate incrementally more sales, and those sales are going to be more profitable because they're not going to have the delivery associated with it, which is where Uber Eats struggles with profitability. So, a bit surprising here in the stock market's reaction. I would have thought Uber's stock would have increased more. Maybe as the details come out over the next few days, Uber's stock price will catch a boost following this news. And I am surprised that Domino's stock price increased as much because it didn't include the delivery aspect of it. If it included the delivery aspect of it and we knew more of the details, then I would have said okay. But this pop in Domino's stock seems like an overreaction from the stock market to the news. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.